Good morning. Welcome to the TCG Pro Show. We're back this week again with another episode. It's only been a couple of days this time, so you guys are in for a treat today. My name is Brad Williams. I'll be your host today. The TCG Pro Show is all about bringing you local experts with expert knowledge that can help you during the buying and selling process of a home. Even if you just own a home, there's a lot to be learned on here. We believe that the experts in the field hold the keys to making the process better and simpler. Like I said, I'm Brad Williams. I'll be your host. I'm joined with my co-host, Don Williams.
Good morning.
How you doing this morning?
I'm doing great.
And we also have a special guest today. We're really fortunate to have him. His name's Tyler Hickernell. He's with Certainty Home Loans here in Greensboro.
Yep.
Is that right?
That's right.
And we're going to talk about all things mortgage. So welcome to the show this morning, Tyler.
Good morning. Thanks for having me. And looking forward to it.
Yeah, so it's going to be awesome. Where do we want to get started? Let's get started with a little bit about you. What's your story? What's your background, and how'd you get into this business?
So how I got into this business is my mom is a real estate professional. So she was in the business before I was, and she had met a lender, which is the branch manager at my office. And she asked, what's Tyler up to? I just graduated, or I was going through grad school, had my first accounting job, and so she was talking to my mother and said, hey, do you think you'd be interested in this? Maybe a good fit. And so I went and met with her, and I was pumped about it, and it went really well. And so the company at that time was called Starkey Mortgage. It's the same company. We just changed names. But they had just started a new loan officer program. So for 6 months, I trained, and they groomed. It was like 6 of us throughout the country. They groomed us. They trained us, taught us about the business. And so that's how I got started. So 6 months of training, and then, I'm out the door trying to build my business. And so I'm going on 6 years now of doing this. And as I said, I finished my master's in finance my first year of doing it. So that's a little bit of my finance background, how I got into the business.
So you were studying to be in something in this kind of field.
Something like, not this per se, because there's not really technical a mortgage degree.
Right.
But, I got my undergrad in accounting, and then I started my first job, and I'm like, I gotta get out of this. So I went back to grad school and focused on finance, which is more what I liked. Mm-hmm. So definitely numbers, finance industry, was kind of what I was gearing up for.
So I find that kind of interesting that you guys both have a similar background. Your mom, Brad, was in real estate, and Tyler, your mom, is in real estate. So that's it probably has a strong influence on how you think about the real estate world, doesn't it?
Sure, that's right.
Did you grow up hearing a lot about the stuff at the dinner table?
So my mom actually got her real estate license like just a couple years before all that happened.
Okay.
So she wasn't technically a real estate agent for, she was an assistant at a firm for a long time. And I think from the time that I was born, from the time that I moved out of the house, I think we moved 16, 17 times.
Oh, my.
So she was a professional in her own, because she always looking at houses and saying, all that. So, yeah, I was well versed in real estate growing up.
That's a lot of moving.
A lot of moving.
Were you guys local to this area, or did you live in other places?
So I was born in Florida, in Lakeland, Florida. Both sides of my family, my dad's and my mom's, was from that area. So when I was 2, we moved up here, moved around a couple times, and then we had some family get sick, I think whenever I was 12, 13, so we moved down there for a couple years and then made our way back up here. So there's a lot of moving around.
Yeah. Well, that makes for an interesting childhood. You probably get to see a lot of different things, make a lot of different friends.
Definitely.
All that stuff. So let's jump right into the home loan thing. So Certainty Home Loans, they're not a bank.
Nope.
What kind of business is it? How does that work?
So we are a mortgage company. So we are not a bank. We are not a depository. All we do is residential home loans, whether that be a refinance or purchase transaction. Right now we focus mostly on purchase with the market, but we offer a variety of loan programs to help home buyers, depending on what they got going on. Usually banks, they may have 2, 3 products most, while we have an array of different products to help buyers in whatever situation they may have.
It seems like from what I've read and heard, most people kind of gravitate to just going to their bank and they don't really shop around loans. What could you tell? What kind of advice could you give to somebody in that situation?
Sure. So I'll give my little story on that. Whenever I bought my first house, I wasn't in the industry, and just walked into my bank, and that's where we got our first loan. And looking back at it now, my wife and I, we were perfect clients. As far as what the loan process should have been. And the week before closing, issues came up. I think we had to push closing out like a week or two. That really had nothing to do with us. So,
right.
As far as the banks, what they're trying to do and everything, they're more focused on their depository accounts. They want your checking savings. They offer the mortgage product as a service to their clients, but that's what we do. That's what
right.
we specialize in. So, I would highly recommend, check with your bank. Obviously, if that's the best route to go for somebody, then so be it. But, I think a lot of the times it'll pay off to, check with a mortgage company, check with a mortgage professional, see if they can help out or, save you some money.
So what I hear you saying is shop around. Don't just buy at the first place you sit down at.
Sure. And I mean, most, honestly, how the process works now is most people, they're going to get linked up with a real estate agent first, and one of the first things they're probably going to have them do is say, hey, you need to get pre-qualified. And, usually they're handing out a card or two, maybe three. So, take advantage of that because they're recommending those people for a reason. They're doing a good job. They're closing on time. They're making the process as easy as possible for the buyer and everybody involved.
What are some of the variables in from one company to the other?
Fees. I mean, fees would be a variable. A lot of banks and some companies, they charge, a full origination fee, or they'll have, underwriting processing fee all tacked on there. And so everybody's kind of different in that structure. Rates obviously are going to be a little bit not too different. I mean, honestly, rates aren't going to be that different from everybody. Maybe a small variance here or there, but if you get quoted a much lower rate than what somebody else is quoting, most of the time there's going to be a fee involved in that. So
they're going to make it up in a fee.
Exactly.
Yeah.
You're going to be paying a discount point or a large origination fee, and it's going to be somewhat balanced out if you ask them to take that fee off, or if you ask somebody else to say, hey, what if you charge this amount?
So it's like the furniture company. They advertise on TV and they say no interest for 2 years. You're going to pay for that somewhere in that process.
That's right.
They're not just giving that out of their pocket. They're going to collect. So it's the same way in mortgages.
That's right. Yeah. I mean, like I said, there's not going to be a huge variance in rate, and most of the time, what home buyers should focus on is the service that you're going to get, because rates are going to be pretty, like I said, pretty much the same, very close, and you want somebody that's going to, that knows the guidelines, that knows the process, that's going to take good care of you, know what's going on, know what's going to be needed from you up front. Obviously, there's going to be things that pop up, but if you have somebody that's been in the industry, you shouldn't have any major things popping up a week before closing and send everybody in a frenzy.
Tyler, you said something to us when we first met talking about doing this show. You said something that you do is you return phone calls. You would think that in this, when you're going through that process that, all loan or mortgage, originators would actually return phone calls, but that's not necessarily the case, is it?
Unfortunately not. And I mean, I know when I just got in the business, a couple people told me, just return your phone calls and you'll be successful. And I kind of laughed.
That's amazing. So
every show we sit down with successful people and we say, what has it made you say? Well, I return phone calls. I answer the phone.
That's just, it seems so simple, but
exactly.
How many people do it?
Yeah. So. Yeah. And, for my side of things, sometimes, it may be on a weekend or, Friday at 6:00, when people are off work and they're looking for a house, and a realtor calls or they call and say, hey, we found the perfect place. I need to get a pre-qualification letter. I need to get an application going. And, if I'm able, I'm taking the phone call, or if I'm out with family or at an event or something, I'll text them. I can send them, the online application, which most people like to do that now. So just being accessible to, people whenever they need it is important.
Awesome.
So somebody's looking at getting a mortgage, and what rate they get I think that's a big factor. What I'm hearing you say is there's a lot more terms. There's a lot more things in there that people should be looking at rather than just their rate. It's the overall thing. But what are some of the factors that affect people's rates?
Credit score is probably the main one. Different programs, depending on what program it is, depending on your credit score would have a small effect on the rate. That's pretty much the main one. PMI, I'm not sure if you guys are familiar with that, but PMI can affect credit scores can affect the PMI on a conventional loan. So there's the fees. I think the fees are kind of the main thing that affects rate, and then credit scores. Sometimes, depending on how much money the buyer's going to put down, can have a small effect, but not really. Really, the main thing is what's being charged as far as a discount fee or origination fee, and then the credit score that's associated with a certain loan program.
Real quick before we get into that, can you explain PMI to the audience?
Sure. So PMI, private mortgage insurance, is required on any loan where a home buyer is not putting at least 20% down, except for VA. VA is exempt. There's no PMI for our veterans. But that came in place, years ago when the housing market was having some issues. So basically, PMI is in place for home buyers who don't have the 20% to put down. So it allows them to buy the house without having to put that much money down. There's a couple programs with some reduced PMI, but that's really what it is. It's in place to prevent our housing market going down in the future.
And that's usually like 1% or.
It's not 1%. On FHA, it's a flat 0.85%.
Okay.
And then conventional can vary. It varies between, the more you put down, the higher credit score, the less it is.
Okay.
Versus, the less you put down, the lower your score, the higher it's going to be. So on conventional loans, you can actually shop it out with different vendors, depending on what the situation is.
Are they still doing no money down lending right now? Is that still something you guys?
Yeah. So there's a VA is no money down 100%. Okay. USDA. Which is for rural areas, out in the county. That's a 100% financing loan. And then there's some down payment assistance loans out there through some cities in our state, which is, they give you assistance to, basically it's no money down. So that option is still out there.
What do you mind giving advice on what you think about all that? Like, what do you think people should do ideally? Should they try to put 20% down? Does that put you in a better position? That
would be the goal, but I mean, honestly, most people aren't able to do that. So, I think personally, if you can get into a house and just get out of rent, that's going to be better than if you can purchase a house, that's better than renting in most cases. If you can afford the payment, you can get qualified. I think that's the way to go. Some of the down payment assistance loan, they have, some payback. If you were to sell the house within a certain time frame, you have to pay the money back. So you'd have to make sure there that makes sense. But no, having 20% down, that shouldn't hinder you from purchasing a house if you don't have that.
What's the norm that you see right now?
Usually it's the minimum. I mean, I have the people that.
So on a non-USDA, whatever, what is the normal minimum?
On conventional loan, if you're a first-time home buyer, you can put 3% down.
3%.
But most of the time it's 5%.
Okay.
And then on FHA loans, it's 3.5% down. So most of the time, I mean, most people that I work with, a lot of first-time home buyers, they're putting that minimum down payment down.
Yeah, I think. I don't want to get into my opinions about all that. That's really not what this show is about. My personal advice to people is, don't be borrowing money that you can't afford to borrow. So having some skin in the game, just kind of talking here, right? So that's what we're doing. We inspect houses for people, and people are buying houses, and they're having to put off everything that happens in due diligence to closing because they don't even have the money. And that, to me, seems like a risky position to be getting yourself into. I mean, I hear what you're saying, buying instead of renting. I hear that logic. Right. But, man, that just seems really scary to be getting into that kind of commitment, a 30-year commitment, and you don't have $500 or $1,000 to handle your fees during the purchase process, and you're borrowing $150,000.
on an older home that has issues.
Yeah, that might need an HVAC system in a couple of years. It might need a roof in a couple of years. Speaking of that, do you guys, we've heard, different loan programs, they might require, like if a roof is over 10 years old, it needs to be replaced or things like that. What kind of advice what do you know about all that?
So for us and my company, we don't really, we don't require a home inspection. We don't want to see that, because we don't want to see what issues are going on. Mm-hmm. For us, all we require is the appraisal. Okay. So sometimes when the appraisal comes in, depending on what the appraiser notes or what pictures are taken, we may have to, certify or have somebody go out there based on what may be going on with the property. Mm-hmm. So but one I had recently was there was a huge crack in the basement. Uh-huh. Huge. I mean, very wide crack, and our underwriter said, we need to check that out. Not only for our purposes, but to protect the buyer as well.
Right.
So we had a structural engineer, somebody go out and look at that, and everything went smooth. But we did do that.
Are there different guidelines with some of the subsidized loans, like a USDA loan?
USDA has depending on what type of water source, you have to get a water test. VA, you have to get a pest inspection done. In FHA, the appraisal is a stricter appraisal. The property has to meet certain conditions, whereas conventional is pretty, it's not as strict as FHA. So yeah, USDA, you're going to have to get a water test depending. I think if it's on well, if it's city water or county water, whatever, you don't have to get that.
So it's a big deal these days. People wanting to buy houses that need work on them. They hear the stories, flip houses. They can get into a house, a bargain house, whatever, bargain price house. And are there loans available for people wanting to do that or to?
Yeah, great question, Don. So there are renovation loans available, and we have an array of different options for that, and we are really good at that. So we have our own dedicated renovation department that works directly with the borrower, with the contractors, to make sure everything goes smooth. So we have a 203K, which is basically an FHA renovation loan, and then we have I can't think of it at the top of my head, but it's a conventional home style. It's called home style renovation loan. Depending on the situation or whatever it may call for one of those programs. But basically it allows the buyer to purchase a house in the condition that it's in right now. And then after closing, they can have their contractors come in and do updates. They can do a lot of different things with those programs. So it's a really neat program that opens up opportunities for buyers, especially in a tough market where there may not be that many homes available in a certain area that they're looking. They find the perfect location and a house that structurally is in good shape but needs updates or maybe need an addition or something like that, and it allows them to get into that house without having to come out of pocket after closing to do all of that, because you're basically financing that into your first mortgage, into the mortgage amount.
So let's kind of walk through that process real quick. So let's say found a house in a neighborhood. I can purchase it for $200,000. I plan to put $50,000 into renovation with the hope that there's some comps in the area that I could get it up to $275,000.
Right.
How would that work? Because if the house can't appraise for $275,000 now, how can you kind of walk through that process?
So if you're purchasing the house for $200,000 now, and you want to put $50,000 of work into it, so essentially you're going to have $250,000 into it. So how it works is you get your bids from a licensed contractor, shows what work is going to be done, and we send the appraiser out there to inspect the property and give a future value. So once the repairs, once the updates have been completed, he can look at the market, he can look at the comps in the area and say whether that's going to be justified or not.
Okay, yeah. So the appraiser is actually kind of looking at it from a future standpoint of what it'll be like. And then, when you guys are involved in that, renovation process. We've done a lot of construction loans. Are you guys kind of involved? It's like, do a little bit of work, get a draw. Do you guys kind of stay pretty involved with that process?
Yeah. So that renovation team that I talked about earlier, they're the ones that stick with it from start to finish. So they're the ones that will work with the buyer, figure out exactly what they're trying to do. They'll work with the contractor, to get the bids in place correctly. And then after closing, as the contractors are doing the work, then, we'll send an inspector out, how many ever times, depending on the scope of the work. And then they're cutting checks, depending on, it's different based on the amount of work being done and the volume. But yeah.
That sounds like a great program, Tyler. I mean, I think about the hassle which you would have to go through if a loan institution doesn't have that in place. You kind of have to create and help them through the process, and that's critical to have that resource. It's
a really neat product. It really is, and I've seen, not every time, but I've seen quite a few times where that future value is coming in, higher than what everybody was kind of expecting based on the work that's being done. And, I will say that the work, the renovations, the updates or whatever that the borrower is doing, there's got to be value into it. So, if you're coming in and you're, repainting a room, putting carpet down, that may not, present the value. Whereas if you're updating the kitchen, and you've got to bring that future value to it. So sometimes we have to, negotiate the bid, say, hey, this isn't really adding any value. Let's take that out type thing, depending on what the appraisal comes in.
Especially adding a room or, making it more functional.
That's right. Or finishing a basement, whatever that may be.
Right.
And we also offer I didn't speak on it earlier, but we have a VA renovation, which the head of our renovation department basically went to VA and basically created the product.
Wow.
So we're one of the first lenders to offer a VA renovation loan, and we just closed one in our office last month, I believe. So that's a really neat product.
I would expect you're going to get some phone calls from this conversation because that's huge, really.
Yeah. I think we run into a lot of people doing VA loans, and that provides a opportunity for a lot of people and. A lot of those houses.
So not just VA, but also a conventional loan.
Conventional and FHA as well.
Yep.
Oh, wow.
Brooke would like to know if you have anything for nurses besides VA.
Okay, so we just got a question in, and if you are watching this live, we would like to hear your questions. I didn't mention that earlier, but if you're watching it live, please ask your questions, and we have about 8 minutes left of the show. So Brooke asked us, do you guys offer any programs for nurses?
So specific loan program, no. But what we do offer to most nurses, most healthcare professionals, is we have a relationship with most of the like Novant, Baptist, Cornerstone, whatever it may be, as a corporate connection. So for all those people that would do a loan through us, we're giving them a $500 lender credit to help cover some of the closing costs or whatever that may be. So that's one thing that I really like about my company is teachers, most all teachers, nurses, policemen, firefighters, they're all getting that $500 lender credit because we have a corporate connection with all of our local. And it's real easy to get that set up. If your company, if you work with a small company or when we don't have set up, we can get that set up for if you're a nurse or firefighter, policeman, anything like that.
Awesome.
Excellent. So I know you're seeing it with what's going on. The age of people getting mortgages are younger and younger, and we're having new generations coming in. And I know my age group, your age group, and younger, we tend to do a lot more stuff online. How does interacting with your company, how do you guys deal with that on the digital level? What do you guys offer?
Yeah, I'm glad you brought that up, Brad. So last year we rolled out a digital app, and it's awesome. It really is. So most of the time when I talk to somebody, I give them the option. They can we can take the information over the phone. They can come into the office. We can sit down face to face, or if they'd like to, they can just complete the application online. So, I'd probably say a good bit of people like to do that because it's convenient for everybody. They can do it on their own terms, sit down, whether they may need a spouse to sit with them, different work schedules, whatever it may be. So I can send them the invitation. They log in, they create their little account. And not only can they use that to, enter in their application information that I'm going to need to get them pre-qualified, but that app stays with them throughout the process. So as they go under contract, they're going to get tasks brought up. So hey, we need to provide your most recent pay stub, whatever it may be, depending on the situation. But they can log in and see everything that's going on. They can see the timeline of the loan process. So the appraisal's been ordered, or we've already gotten initial loan approval. Hey, your loan's final approved. So they can log in and they see everything that's going on. They can upload their documents through there securely. They come directly to us. It's a really good product, really good app that we've gotten a lot of good feedback on. And so there's two parts of it as well. So not only can the borrower and the client log into the app and do what they need to do, but we can also invite the real estate partner to be a part of that process, so they can have their own app, and then they can see what's going on as well, so they can be informed.
Oh, really important. Yeah.
Which is really important. And I don't mind realtors calling me for an update, because that gives me like to talk to them and build our relationships, but that gives them the opportunity to just check real quick and then just pull it up and say, hey, okay, the appraisal's in. That's great. We're working towards final approval, whatever it may be.
So just to kind of recap, to use the app, that's something that somebody would need to get in contact with you guys, and then you guys would invite them, send them an invitation, like an email or whatever.
That's right.
And then they can start that process.
They start it up. So, if somebody tells me they want to do the online application, I just get their full name and their email address, and I can send them the invitation, and they log in, create their profile, go through and enter in all their information.
That's a lot more low stress for a lot of people than having to come in and sit in an office.
And some people like to do that. And honestly, I like to do that.
Sure.
I like to build a relationship and fill them out. But I will say one thing about our app too, because we've had the online portion for a while, but this one's really well done because it kind of asks you questions. Are you looking to purchase, or are you looking to refinance? And so off of each question, it brings up what information needs to be filled out.
Right.
So, do you currently own a house? Is it your primary residence? Do you own investment properties? They can enter in based on what they have going on.
Right. Cool.
So you said for the younger generation. How about older guys like me? Is it easy enough to use for
definitely? That's kind of what I was just getting at.
I just wanted to clarify. In case there's somebody out there.
I just know that I think it's more of the handicap of the younger generation than I wasn't complimenting us. I just see younger people not wanting to pick up the phone. They don't want to do interactions in person. They're looking for ways to do more and more via online or digitally. So I didn't mean that as a dig. So before we run out of time here, can we talk a little bit about the climate right now and what you see going on? So what's been going on with rates over the last few months?
So rates have kind of been they've been going down a little bit over the past month or so. So last year, we were on a rise, but the beginning of this year, they've kind of trickled down. Last week was a good week as far as rates. I do think that over the course of the year, they're probably going to be trickling back up. Spring market comes around, the economy, see what the economy does. But speaking to people that are looking to buy, I don't ever recommend just sitting on the fence. Because if you qualify right now, and mainly I'm speaking to people that are under contract or they have an offer accepted. I don't recommend sitting on the fence because there's just so many things that can happen, that are out of everybody's control. But yeah, the rates are, over the past month or so, they've kind of trickled down a little bit.
Right.
So now's a good time.
Now is a great time. It really is.
Historically, they are at a low point. They're not, they're not at a high point. So this would be a good time. Money is cheap right now.
Yeah, and even last year, whenever I said rates were a little bit higher, they were still historically low.
Right.
So yeah, now is a great time. And I'll say for people that are thinking about it, check your credit. The online credit schemes, Credit Karma or through their credit card, that's a good way to kind of see what your credit's doing. The actual score that you see may not be 100% correct because they don't have all the information. But if you see that your score is going up, that's good to see. If you see it's going down, you might need to check and see what's going on.
Is it okay to check your credit, or does it adversely affect it?
So I think you can check your credit for free one time. And that doesn't adversely, it's like a soft pull. And like the Credit Karma and all that stuff, that doesn't have any effect on your scores.
Okay.
But yeah, if you go finance an automobile, that's going to ding your credit as a pull. And it's also going to pull your credit down because you've opened up a large new account with no payment history on it. So car purchases are tough because, usually that retailer, they're going to shop you. So there's no, the automobile industry is really tough because, whenever they put that information out, you may have 6 different people pull the credit.
No.
So we've seen that a lot where people buy a brand new car and those scores have been drastically, changed from what they were, before that.
So maybe it would be a good general rule of thumb if you're thinking about buying a house in the next few months, hold off on that car purchase.
Definitely. If you're thinking about buying a house within the next, and whenever in the future, maybe not years, but don't open up any new accounts. Don't have your credit pulled. Try to pay down your revolving debt, your credit cards, your store cards. Try to pay that balance down as much as you can, because that'll help your scores go up, which will help you throughout the process.
And getting locked into a good rate and a good payment, that can save you a lot of money over a 20, 30-year
definitely
time period. It's not just small change. A quarter of a point or half a point could be huge.
That's right. That's right, for sure. And it could be the difference in qualifying. Honestly, in some situations.
Well, so if somebody wants to get up with Certainty Home Loans or want to talk to you, is that just a local Greensboro thing, or is that?
Well, we're kind of throughout the Southeast. Our corporate headquarters is in Texas, but yeah, we have an office in Greensboro, Fayetteville, Charlotte, in the state.
So I think pretty much everybody watching this could do business with you guys. But if somebody wanted to get up with you specifically, how would they do that?
They can give me a call on my cell. And do you want me to give my number?
If you'd like to.
Sure. Yeah, my cell is 336-423-3542. And then maybe we can post my email address.
Yeah, we'll post that in the show information and all that. Unfortunately, we're out of time, but I think that we maybe could continue this topic in the future, and we'd love to have you back sometime. We really appreciate you being on the show.
Yeah.
It's been great. Any final thoughts, Dad? Well, thanks for watching the TCG Pro Show. We'll be back next week with another exciting topic. Thanks again for joining, and we'll talk to you guys soon. Bye.